Chinese stocks are down more than 30% since June 12th. Imagine if that was happening here in the U.S. and the Dow dropped 30% in just a month. What is going on with the Chinese stock market, and should we be worried here? Robert Brusca rejoins us here on Arise Xchange to talk about what's going on in the Asian markets. It's not just China, it's in Hong Kong as well. So the big question is here is, why is this massive sell-off? Did panic just ensue?
Well, I suppose we could go back to the days of the Roadrunner and the Wile E. Coyote cartoon characters, where Wile E. would run off the edge of the plateau, and he would hang there for a few minutes before he would fall. And the question is, not why did he fall, but why did he hang there for a few minutes, right?
Right.
So that's the question for the Chinese stock market. Why did it get to be so overvalued? You know, the Chinese economy has been slowing for some time. Economists talk about it. Most of us think that the official figures are exaggerated, and they're showing a slowdown. So I think that it's an example where you just have had this disconnect between what's going on in the real world and what investors are doing. And the Chinese are great speculators.
Yeah, they're great speculators, and there's also been long concern that the stocks in the Chinese market are not nearly as quality stocks that we have here in the U.S. from just a regulatory perspective, that their transparency and their reports aren't as accurate. Is that sort of getting into the picture here a little bit?
Well, I think that's always been a question about Chinese companies. You wonder about the accounting. I mean, let's remember, China is a communist country.
Right.
And
it is a government command-controlled economy. Right?
And so we have P&L, we have accounting for profits and losses because we're a capitalist economy. And so when firms first went into China and tried to think about taking firms public, they had to totally revamp the accounting they had because they weren't geared to even figure out if the company was making a profit. And so I think that you have a psychology in China and a way of doing business. It's totally different than us in the West, even now.
And the response from Chinese regulators looks, I've read, more like the response we had in 1929 than a modern-day response. Regulators understand, at first, are stopping trading on some stocks and also apparently trying to inflate it by putting money, physical money, into investors' hands and telling them to go buy stocks. That does not sound like a good policy.
Well, of course, if you do that, and there's a great parallel here to what's going on in Greece, because you can give them more money, but if they're doing the wrong thing, it's not going to help. And that's the same thing in the stock market. You can't just keep pouring money into a market where the fundamentals of the companies are poor. And this is, I don't know why we keep trying to make mistakes like this. You have to fix the fundamental problem. Yeah. And stocks did get way out of line. And I don't know if I know where stocks will be back into alignment in China.
So is it possible that this is, I mean, we call it a crash, but this is more of a fundamental correction than a outright bursting of the bubble? Or both?
Well, they're both the same thing. I mean, you have a bubble gets burst because you had a bubble, because things got overvalued, and then they have to fall back to earth. And we've seen this in China before. You have these boom and bust cycles. So the problem is that the economy is slowing. And so the safety net that stock values will fall into is moving away from them.
How much exposure do American companies and American individuals have to the Chinese market?
That's a good question. U.S. multinationals have a large position in the Chinese market. And of course, recently, the Chinese have been going after foreign companies for taking advantage of the consumer. They've been using what they call monopolistic laws to go after them and using them in what's an entirely inappropriate sense. But they've really been doing whatever they can do to try to get prices down to try to stimulate consumption, as if you can do it that way. So it's a very strange market where you have regulators who are in a communist country trying to introduce capitalist concepts. And it's no wonder that things are going awry.
Is this a blueprint, then, that this system doesn't work, that everyone was complimenting the Chinese system because the economy was growing double digits every year, inflation was in check, the market was booming, but maybe now the chickens are coming home to roost on this, or is it too early to say?
Well, there are some economists who are saying that the Chinese knew what they were doing, and I just think this is blatantly stupid. I mean, here you have an economy that's grown so fast, nobody has any idea what's going on. Yeah. The statistics are totally wrong. They didn't have a good network in place to take care of them.
They manipulate the currency.
And on the other hand, we have this tremendous statistical process in the United States, and we still have a hard time getting things right. So I think that China is definitely a case of a country that was given more plaudits than it deserved.
We need a Chinese economy to be very strong. Why is it slowing down? What are the key reasons?
Well, I think the key reason is that they had this export-led growth model where they were exporting to us, exporting to the West, exporting to the United States and to Europe. And we slowed down. We had the debt crisis, and we couldn't get leveraged anymore. But they had the low currency, and so they were selling things to us and basically stealing our wealth. And the more that this was undermining us, the less we were going to be able to continue to buy things. And this ultimately had become and stop China. China couldn't continue to leverage this way and to sell us stuff that we can't afford.
And China's turned its attention now to Africa. And I'm wondering if a Chinese slowdown is going to impede their investments in Africa, or if they're going to try to exploit the market more.
Well, they still have a lot of money. They have a lot of investments. And for them, Africa is raw materials. This is what China doesn't have. And this is what this whole South China Sea, I want to call it a land grab, the sea grab is about, because they think that there are minerals under there, and they think that they can claim them by claiming the ocean and then taking the minerals underneath. And Africa is the same thing. They're trying to make nice to people that they think have minerals.
Bob, thank you for doing double duty with us today.
Thank you.
Appreciate it. Bob Brusca. Appreciate it.